very warm welcome to IDFC First Bank Presents Leaders of Tomorrow Season 11. I'm Ritwika Gupta, and here's wishing all our viewers a very happy Independence Day. Today we have a very special conversation lined up, talking about India's economic positioning on the global stage. I'll be in conversation tonight with TV Mohandas Pai, Chairman Aarin Capital. Thank you so much, Mr. Pai, for joining us today.
Thank you very much.
So as we celebrate India's Independence Day, how would you say India is positioned globally on the economic front? How does the world view India, and where do we stand?
Well, today we are $3.45 trillion in GDP. We have grown from $275 billion in 1991 when you opened up to $3.45 trillion in 2023, a growth rate of 8.2% a year for 32 years in dollar terms. We're the fifth largest economy in the world. Germany is about 4.2 trillion, Japan 4.4 trillion,
Sure.
and we will take them possibly in the next 3 years. We are on the way to $5 trillion. This year we're growing at 6.5% plus. We have $602 billion of dollar reserves with us. We have a great banking system. So the world has taken care and is looking at India very differently now. And India's stock globally has gone up. We are among the fastest growing large economies in the world. And we are seeing explosive growth in many, many areas, including technology. So the world is looking at it very, very differently from how the world was looking at us 10 years ago. Globally, in the Ukraine war, which is the European war, we have stood away from both the forces. We've taken an independent stand. We're working with the United States on the Quad. And we stood up to China. We stood up to Pakistan and showed them their place. So the world knows that India is growing very well. It has got a great, clean banking system, high foreign exchange reserves, and it has an investment of $1 trillion a year. We invest 31% of GDP as per Mosby data. There's $1 trillion a year. Suddenly the world sees us very, very differently compared to where we were 10 years ago, as an emerging power and a country with which they must do more business. China has undergone a change because of China plus one after COVID. So the world is seeing that India is an alternative place for global manufacturing, and that too is adding to the luster that India has.
So, Mr. Pai, you have been closely associated with the country's IT industry from its very nascent stage. Could you help us understand its evolution?
Well, I think we started off in the early 90s when India opened up as software exporters, largely body shopping and doing small projects. I remember in 94 when I joined Infosys, I think India was exporting maybe $100, $200 billion. Then we started growing and we undertook many, many projects. We set up offshore centers. We had satellite links to convey data. We also made sure we hired a lot of people. We led during the Y2K boom. We led during the internet boom. We led during the enterprise boom. And the global financial crisis, we came back in a very big way. And today, we're the largest exporter of software services, nearly $200 billion. We have 5.5 million people working in export of software services today. Among the top 10 software service companies who are the most valuable companies in the world in market value, 5 are Indian, top 3 are Indian. Among the 3.2 million employees in the top 10, nearly 2.3 million are Indians. The United States has 6 million people working in America in software. 1 million are Indians. Out of 5.5 million working in India, about 3 million work for American companies. Out of 10 million working for American companies, 4 million are Indians.
Absolutely.
So we dominate this field. Like I said, 60% of global outsourcing comes to India. And about 2 years ago, we hired 500,000 people in technology, the largest hiring in technology software services in the world for any year. Going forward, no country has the human capital, the management expertise, the project management quality that India has. And we will be a larger part of the global software services. On top of that, we have the third largest startup ecosystem in the world, 99,000 startups. who have created $500 billion of value with 108 unicorns. And we see that we had about $140 billion of capital coming in from 2014 till June 2023. Going forward, we believe the value could go up to $1.5 trillion in 2026 with 250 unicorns. And right now we are seeing greater interest in startups. So in terms of technology services, in terms of startups and deep technology, in terms of people trained on AI, India is among the top 2-3 countries in the world. In the free world, the second largest country in technology after the United States.
Right, and speaking of digital, tell us, how has India fared on the digital public infrastructure (DPI) front? Are we on the right track towards becoming a global digital economy?
We are in the midst of the biggest change the world has seen in the last 15 years, that's the digital revolution. 250 years ago, when the industrial revolution took place in Great Britain, China, India made up 45% of world GDP, largely because we had a large number of skilled people, and the world was run at that time by human muscle and animal power. Then came the age of machines. Great Britain dominated, Europe dominated, Asia became colonies and supplies the raw material and markets for the European powers. Now, 15 years ago, a great event took place, the growth of the internet. The internet is a platform where people can deal with each other, interact with each other, synchronously and asynchronously. Out of 8 billion people on the planet, 5.5 billion have a mobile connection, maybe 5.4 billion people on the internet. So in the midst of the digital revolution, India is the third largest digital power in the world after the United States and China. We have more than 850 million people on the internet, 1.3 billion people are connected through Aadhaar. We opened 485 million bank accounts using Aadhaar. We have 42% of digital payments globally. And through UPI, we had $185 billion of money transferred in the month of May and $8.82 billion of transactions. Those are very huge, 42% of the world. Our money transfer, mobile to mobile, account to account is better than any country in the world, including China. We lead China too. And going forward, India has pioneered the digital public goods like the OCEN, Open Credit Enabled Network, ONDC, Open Network for Digital Commerce. And we have the UPI, we have the account aggregator framework. And all these things as public goods has made it easier for companies to create APIs and log in and grow. No country has that. No country. And this is huge. With the whole of India is coming together. Ordinary people are using digital payments to operate their bank accounts, to interact with each other, to sell goods, to receive money, etc. And I think this is fantastic. 30 lakh crores has gone into DBT program for the government of India. That is incredibly huge. Our tax network is very, very strong. 7.2 million, 72 lakhs transactions on a single day, nearly 5 lakh transactions per hour. Our GSTN network is one of the most sophisticated the world has seen. 14 million people who log in and file the returns. So if you look at how digitization has come for India, it is fantastic. We consume 23 GB of data per month, and all that has been done at a very low cost, with the lowest cost of data in the world.
Absolutely.
So we are a true digital power. We have the software industry behind us, globally competitive. We have the startup industry in front of us. We have people in Bangalore working on digital public goods so that everybody can use them. We have a very unique model like UIDAI and NCPI, etc. No country has that. So we are poised to dominate the digital revolution in the free world. And I think that is where India has a leading position.
Sure. Mr. Pai, some of your areas of interest include human resources, education, and research. These are also areas that warrant improvement across the country. So tell me, what are the key measures that are needed towards addressing issues related to these sectors?
Well, let me tell you first, when you talk about Indian education, you must understand no country in the world, any time in human civilization, the last 10,000 years, had so many students in college as India has. We had 265 million children in school, 265 million, much more than China. We have 42 million young people in college. We graduate nearly 10 million young people every year. Women are graduating more as a percent of population than men today. And this huge infrastructure, 1,200 universities, 55,000 colleges, is very huge. All of them cannot get a very good education. Even in the United States, barring the Ivy League colleges, the top 20%, others are pedestrian. Same thing in every country. So let us not belittle ourselves by saying where is the quality and beat our breast all the time. We have a very large educational infrastructure. More and more people are getting educated. 25-30% of them are getting education of a very good standard. We have 750,000 Indian students studying overseas. We lead the Chinese and overseas students in the United States. We have about 150,000 doing PhDs. Many of them may not be good, but anyway, they're doing PhDs. And this is huge infrastructure. And we have a new education policy which has reformed higher education and school education, given autonomy to our universities, and made sure that we're creating a much more open, transparent system, which is suited to the genius and the psyche of our people. So we have come a long way. And if we look forward today, we can only go up and do better and better and better.
Before slipping into a short commercial break, here's quickly telling you all about Brand Surge, a new initiative by Times Network. This is a unique opportunity for startups to be on TV without a TVC that can help you, the entrepreneurs, reach up to 25 crore viewers of Times Network through packages starting at only 1 lakh rupees. For more information, log on to brandsurge.co.in. On that note, we'll take a quick break here. Back in just a moment. Stay tuned. Welcome back. You're watching our Independence Day special on IDFC First Bank Presents Leaders of Tomorrow Season 11. In conversation tonight with TV Mohandas Pai, where he sheds light on India's dynamic startup ecosystem and a crucial piece of advice for entrepreneurs. Listen in. Talking about education, there has been an increase in edtech firms in India. You're also now part of Byju's new advisory council. Tell me, with the increased scrutiny and funding winter, how do you see the development of this sector panning out?
Look, we must understand markets, whether private or public, in the financial side, move in cycles. There's a great increase in valuation. Money comes in, valuation goes up. Then suddenly fear takes over. Valuation cracks, valuation falls, and slowly value creation goes up. And then value creation becomes more than valuation. Money comes in. In the last 8 years, I've seen some 4 cycles. The SoftBank cycle, then after that, we had the COVID cycle, and then one more cycle after that, and now the recent cycle, which you call as funding winter. And the so-called funding winter has happened because the US Fed is raising interest rates. When interest rates go up, there's a great shift of money from fixed income and high-risk investment like venture into fixed income.
Sure.
Today, overnight money or maybe short-term money gives you 4.5% in the United States. So a lot of money is going there. People are not investing. Inflation is high. They're not very sure where the interest rates will go. But in the recent past, we've seen more money flow into the public markets in India. So these things happen in the public markets, in the private equity markets. They have happened in the past. They will happen in future. As far as EdTech is concerned, all of them are grown during COVID. Now with COVID going away and people going to class, they have a sea change and they have to adjust. And many of them are adjusting to the growing reality of offline, online, and hopefully they'll do well in the future. But in the startup industry, so much money has been raised so quickly by many companies that they have not been able to up their governance standard to meet the requirements of what they're valued by the market.
Absolutely.
Yes, they're all young people starting companies for the first time. They have to go through this curve. They have to go through the knowledge curve. I'm sure many of them will do extremely well. They'll come out of it. Some will fail. And if the percent of failure is not very high, it is okay. In business, there will be failure. There'll be successes. What is important is, do you have more success and failure? In the startup industry, we have substantially more successes than failure. In the last 1 year, 1.5 years, we've seen so many companies tighten their belts, reconfigure the revenue model, look at profitability instead of spending money to grow the top line. So there's been a sea change. And they're all responding to the markets and needs of investors. But this is a cycle that goes on and on. We don't need to get worried. All we need to do is to make sure that we always keep cash in the bank. We don't blow up money. we tighten our belts, work harder, and ride the storm out.
Sure, and like you rightfully mentioned, with India having an extremely vibrant startup ecosystem, tell me, as an investor, what are the parameters that you are looking at in terms of funding?
Well, look, we invest in the seed and Series A level. At the seed level, when a group of people, 2 or 3 people come to you and pitch a PPT with nothing to show, what do? You look at their PPT, look at the areas of interest, look at the capability, see the body language, see what they do, and bet on people. So seed is a bet on people, bet on what you think they can achieve. It's a gut feeling that you have based upon data, based upon careful analysis. And once they grow and they do well, they come out with a product. Then Series A is a different thing where you have something in hand and you see it try to grow. Then you help them get growth capital. So it is a way of interacting with people. For example, in the 314 office, they get 700 companies coming every month asking for capital. They got software to sieve it out, and maybe 40, 50 that talk to invest in 2 or 3. So that is the ratio. But 700 companies come. The pipeline is very strong. Today, 6 months back, there were 800 companies. And many of them are good companies. Many of them are good founders. So not too many are coming as good founders from big companies like earlier, because I guess many of them don't want to leave the jobs and start companies because they feel the risk is greater or there's fear in the marketplace. But nevertheless, a lot of people are starting. So these are all cycles. But do we have a very large system? Yes, 99,000 registered, 21,000 funded, 108 unicorns. Out of 1,320 odd unicorns, the United States, China, and India have 1,200 unicorns. India is number 3 in the world. And from 2014 till now, the US invested 2.34 trillion, China 830 billion, India only invested 140 billion. We don't have enough capital. Out of 140 billion, hardly 10-15% is Indian money. Big institutions like LIC have not put any money. It's a crying shame. The insurance companies are not putting any money. The banks have put a little bit of money. We understand they need capital for the lending. But pension funds are not putting any money. And globally, insurance companies and pension funds are major investors. The Canadian pension fund has put $10 billion into India, 2 or 3 billion into startups and venture. What has LIC done? LIC has a balance sheet of 50 lakh crores. The insurance industry has a balance sheet of 60 lakh crores. What have they done? Regulations are very hard. They don't understand. They eased out, but still they're not doing it. Despite all this, we have built a world-class startup industry. We should be proud of what we have done.
Mr. Pai, our show, Leaders of Tomorrow, caters to a lot of MSMEs, the backbone of India's economy. What do you think needs to be done to empower MSMEs in India? What financial measures, can really help boost the business ecosystem in the country and support the MSMEs of India?
Look, the biggest challenge MSMEs have, in my opinion, is the big guys don't pay them. You've seen the finance minister say that the public sector and government will pay on time, yet there are many delays. They don't get money. The big companies, Sensex 30, Nifty 50, Nifty 100, do they pay them on time? They don't pay them on time. They ask for credit. Why do big companies, which are triple rated, ask for 45 days credit from MSME? Why don't they pay them immediately? Pay them within 7 days. They take credit from them, don't pay them 45 days, and then proudly say, we got negative working capital. We don't have AR because we bill immediately, collect the money under duress because we don't give credit. Then we don't pay our creditors, we got negative working capital. I mean, it's a shame, isn't it?
Absolutely.
They're using somebody else's money and calling it negative working capital. Any CFO who talks like that should have his head in shame. So we must ensure MSMEs are paid within 10 days. If you pay that, the velocity of money circulation goes up, they'll be able to manage their affairs. And the second thing which you must do for MSMEs is to create a pool of capital, let's say 50,000 crores fund. When MSME has been there for 5 years, 8 years, they're going for an expansion. This fund should invest in them in the form of preference shares with a coupon for say 10 years as quasi-equity, and ask the bank which gives a term loan to give it to them up to say 5 crores per MSME who qualify. What are the qualifications? You should have been in business for 5 to 8 years, and you should have paid back your bank loan. There should be no default.
Sure.
And give them some equity, preferred shares, so there's no voting rights control, because they lack equity. To grow, you need equity, you need money. They make less profit because the big guys squeeze them. The big guys don't pay them. And how will they grow? It's terrible if you don't pay. In the United States, if somebody says they're going to pay you, they have to pay. If they don't pay, the rating comes down. Here, nobody cares. Nobody cares. Does the public sector pay on time? The large buyers, no. Does the government pay on time? No. In many state governments, you have to pay the officials to get money. And this is how we treat MSMEs. That's the biggest problem. You are able to make sure they get the money on time when they bill. If you're able to make sure that they get access to capital, equity capital, preferred capital when they grow, 40-50% of problems of the MSME can be solved. And that's why that 5 lakh crores of loan guarantee during COVID given by the finance minister was fantastic. He saved the industry. And the scheme was very simple. 20% of what you have working capital, give it to you under the loan guarantee. And now government says the loss is around 4 to 5%, which is okay. It's okay. That's fine. Government should pay the loss because you save jobs. So we need a different kind of support where everybody pitches in and solve these big problems. And I wish the MSME as well, because Infosys or MSME once, when I joined Infosys with 3 million, now they're close to 20 billion. They had 400 people. Now they got 340,000 people, right? They become giant companies. We've seen them grow, small companies. Small companies should grow. Small companies have great entrepreneurs who dream, who sacrifice. So society should help them. We must create these mechanisms to make sure that they get all kind of support to grow.
And as we are wrapping up this interview, tell me, on Independence Day, what's that one advice you'd have for emerging entrepreneurs of New India?
The founding fathers of a constitution, the generation in the 50s, 60s who struggled to build a great life for all of us. Let us pay our respect or homage, be grateful to them, and let us promise all those people who fought for our freedom that we'll keep the freedom alive. We will keep this country going, and we'll build a new India where there'll be prosperity for everybody, and every young person and every child can live their dream.
Well, it was wonderful chatting with you. Wishing you a very happy Independence Day. Thank you for joining us today.
Thank you. Wish you all a very happy Independence Day.
With that, it's a wrap on this episode of IDFC First Bank Presents Leaders of Tomorrow Season 11. Hope you enjoyed the conversation. Wishing all our viewers a very happy Independence Day. Thank you and goodbye.